Hello everyone.
Hello everyone, welcome back to another markup discussion video. So as usual, we're going to go through a few markups and talk about the positives, the things to improve on as well. So cool, let's get straight into it.
Let's go.
The first one here from Hem, who sent this one into us. Let me get the annotate tool, which is a brilliant markup. Again, one thing that we wanted to say on this one was just make sure you're always focusing on price delivery. Price delivery is super important. As we say near enough every week, this is literally how prices always move in at all times, always in this price delivery, range, initiation, mitigation, continuation. This is how the BFIs move the price. So just make sure you're always focusing on range. Now, obviously I said in the week to make sure that you're focusing on any sideways price delivery, then that initiation, and obviously inside the range is going to be your point of interest, because that's where price is going to return back to mitigate and continue lower. Yes,
exactly. I wanted to mention again, Hem. I know we're only looking at one chart, and you sent in the full narrative from the higher time frame. So just wanted to say, the markups were excellent. Didn't really see much, faults in them at all. And your improvement since you've joined NJAT has been huge.
incredible.
Like your markups have improved, like especially over the past 3 weeks. They've improved a lot. So yeah, well done to you. Keep it up. But yeah, I just wanted to mention, just talk a little bit about calls. Obviously, you guys know that we just made that video. So yeah, we have that initiation, right? That range is created. We have that initiation out the range. Notice, right, these sets of candles in here. We've got inside bar that gets mitigated and creates that continuation in price delivery of lower prices, right? So right here, notice how price mitigates, drops, mitigates again, right? What does this become? This becomes our cause for our mitigation, right? So while this price delivery is, while we're observing this price delivery in the moment, this is what I would be thinking, right? We've just had that initiation, had another initiation from this range. This is what I'm looking to play. And obviously Hem is looking at the exact same thing, but once again, this cause here is that evidence or that confirmation for that mitigation happening. Yeah, and then obviously he's mentioned these causes to support these lower prices here. And I think Bern, you was going to talk about the no break of any swing high.
Yeah, so essentially it was, that's literally on the next one.
Was that the next one? Sorry.
I was going to say on this one as well. Let me just clear all this. So this is price delivery as we know it, that range, initiation, mitigation, continuation. But again, I showed this in a previous video. These are just different I mean, these are only 3 variations. There's going to be loads of different variations, but these are all variations of the same price delivery. So sometimes they'll create liquidity just before they break out to the down, just before that initiation to the downside. Sometimes they'll just initiate price and then create liquidity afterwards, which are obviously these two here, where you get like a high here or you get a high within there. But again, this is just this price delivery here is just a variation of the same price delivery. Again, range, initiation, create that liquidity straight away, move price lower, and then obviously build price back up, build in liquidity underneath, which obviously you've put in here, which is perfect for obviously lower prices, come back to mitigate, and then the idea is then to just run all this liquidity. Just something else to obviously be aware of is looking at the other side. So even though we're looking for shorts here, just watch as causes being built for the other side, because that's important. That's going to help you. Let's say, for example, we got a momentum shift here. You know that straight away this is where price is going to be coming back to target essentially. But other than that, it was perfect markup and a great set of markups as well. And also, if no one's watched Hem's video, it's about 20 minutes long, just showing his process of how he looks at price delivery and how he's interpreted price delivery from obviously the concept so far. We're going to upload that to the channel as well. So it's just another thing you guys can watch.
Definitely watch that.
Cool. On to the next one. Unless you had anything more to say about this.
Oh, just hem, this might be just for you, so I'll make this quick, but understand, I'm not sure, I'm assuming you took profit here because of what was left. I'm pretty sure it was like maybe a higher time frame OB. But just remember that even though you're taking this trade here, you want to understand the full picture. What happens up here is there's a momentum shift on the 1 minute in a previous higher time frame point of interest. So understand that price is now looking to target a swing low, a higher time frame swing low. So you taking profit here, you know, is for me slightly early, but I mean, obviously, you know, profit is profit. But yeah, just try to, you know, take the lessons from your winners and see how you can continue to hold them. You're not always going to be right, but the majority of the time you will be. And that's with the understanding that that's with the understanding of what the intention of price delivery is trying to create. So yeah, for me, I'll be looking to take profit after the run of this low, because I know that below here is cause for higher prices, right? Because that's essentially like grabbing liquidity, and then we might get momentum shift, and then price obviously might reverse, especially as we was in, we obviously know that EU was bullish. But yeah, just wanted to quickly say that.
Yeah, these literally just become reaction points then for left. So obviously create more liquidity, which is exactly what happened here. But again, just really, really good markups, and you're making some amazing progressions.
Yeah,
so,
definitely.
I mean, everyone in the group is making amazing progressions. So it's going to be amazing to see where everyone is by, you know, even a couple of months away when we've initiated more of these videos and more understandings are coming through. But cool, on to the next one. So Ushan said we was going to do this one as well. Again, another great markup, and it's great to see people's markups with just loads of annotations, because obviously that helps us to understand exactly what you're seeing as well. If there's only a couple of annotations, we understand what's happening, but we want to know from your perspective what's happening. So obviously we can give you more detailed feedback. But again, just a great markup. Like one thing again I notice, and we always say this over and over again, the price delivery is very, very important. So here where you've drawn like that one box of that mitigation of this here, essentially all of this is a range: initiation, mitigation, continuation, lower. But again, this is a whole sideways delivery here. So and again, because it's small, on the M1 you can use 50% or open the range, because your stop's only going to be 1.5 or 2 pips. So that would have been a potential entry there that you could have got involved in. There, do you want to add anything to this? That one.
Yeah, well, just obviously sorry, let's get my annotation tool. 2 seconds. Yeah, so here you talk about no BS, no BOS, so it becomes a weak low, no net liquidity. So again, it's like the real key here is when you see this in the moment, don't be afraid to think this, right? You don't have to see it in hindsight to understand what's going to happen. This is what needs to happen in order for price to run lower. So, you know, when I'm seeing price delivery like this, I'm confident that me taking any swing back up into this range, it's going to move away, right? Because this is that intention of price. Yeah, but again, good observation on these lows and seeing where that those lows are to support price, right? On a higher time frame, we're just looking at a move down. This is just, you know, a couple of candles on a higher time frame of that move. So you can see that that last mitigation is that full mitigation out of this sideways range that was being created. So yeah, you know, great observation there and seeing where that started from.
So this one here as well, we wanted to, you had this breaker structure here, but this is one of the things that I wanted to talk about in a swing. So this essentially, this is a swing high, swing low. So this is a breaker structure, because that is a structure high, but it's more, this is the momentum shift happening down here. So we've got that low, high, takes the low, and then we shift momentum to the upside here. So obviously that momentum shift as so. So obviously that wouldn't count as a breaker structure, because we're looking at that swing high to swing low. So all of these in here just become points of liquidity for the market to take essentially. And then obviously while it builds liquidity at the lows, but again, the price delivery here is so important. This is, we're going to keep on saying it until all of you just understand that how important the price delivery is, because this is how they're moving the price up and how they're moving the price down. I mean, even in here, pretty sure I took this one. But again, range, initiation, mitigation, continuation, higher. And it's just continuously happening. Range, initiation, mitigation, continuation, higher. And it's over and over and over again. Range, initiation, mitigation, continue lower. And range is always going to be that sideways price delivery. So range is for me two things. You've either got this range here from this high to this low, being that price range from the price high to the price low, and then obviously prices ranging within this price, but also you've got that sideways delivery, which is obviously what we look for. Examples are here. This whole thing is a sideways delivery. This is a sideways delivery here, which is where all the orders are being stacked for that mitigation for lower. And essentially they're the two different, I want to call it variations, but they're the two ways. Sorry, let me put that back on. They're the two ways that we're looking at. They're the two ways that we're looking at price ranges. So ranges is in ones that we're looking for our POI, which is inside the range, and then a price range is between the high, between the low prices within these 2 points. This is a range within these 2 points. So they both. It's have
it comes.
Yeah, go on.
It's time frame and structure. If this is what that document is for. It's just, you know, people say the 1 minute's noise. It's not noise. What simply happened is that this is pulling back. Oops, sorry. The meditation tool again. This is pulling back into a previous range, a higher time frame range, right? And this is where we talk about structure and time frames. This structure is inside of this move on this time frame. So let's say, you know, this is maybe a 15-minute move down, and this is a pullback into this 15-minute range that has been created, right? And this, we have the momentum shift. So, you know, now we need to understand where is this reacted from, and is this cause for higher prices? Is this a higher time frame POI? Because if it is, and we do have that 1 minute momentum shift, then that gives us signs that we're going to get that reversal, right? But the other thing to also take in mind is what cause it has been created for this momentum shift, right? Not much, right? To support a move like this, we don't see much there. So, you know, with observation of price delivery over time, you guys will start to see this for yourselves. This is what we've come across by, you know, the time we've spent on the charts. You know, as we know, everything matters. And all we're seeing here is this trend, right? We're seeing a simple trend of price moving down, price moving up, and price moving down, right? And that's why we see causes created to run the low. Pretty simple, but yeah.
And there's one more thing as well, which I've just noticed: the liquidity, drawing liquidity like this. Remember, the liquidity is, if you're drawing it diagonal, it's got to be up like this, because it's low and low above that low. So that makes that stacked liquidity. Let me show you an example here. Like here, for example, this low, the low is higher than the next low. Now it's diagonal liquidity. If you're drawing it down, this low has already been taken, which means there's only one low of liquidity left, which will be this low. Just one more thing there. But yeah, apart from that, just perfect. It's really, really great to see that you're taking everything on board, and you're and obviously you're giving us everything that you possibly can so that we can understand what you're seeing on the chart, because these markups are just getting better and better every week, and you're seeing more, and you're all getting so much better as well. So,
and it's not
just a matter of time before you're literally where you want to be. So please continue.
Exactly. And that's what it is. It's understand that at the stage that, you know, if you are in NJAT, it is just a matter of time. You know, we are not sharing anything that is random or made up. We are sharing things that that the market actually does do. And you guys are seeing that you've seen that for yourself. So understand that it's a skill. It develops over time, but you will get to a point where you're consistently understanding the market and taking these entries. You're in if you're in an NJAT, you're in a good place. It's literally just a matter of time for you. So yeah, stick in there. And again, well done once again.
Exactly. Cool. So on to the final one. Obviously, we're gonna zoom in for this one as well. Yeah, you go ahead, Chucks.
It's a huge screen. I don't know what size this is, but yeah, I guess
I'll literally say, I was going to say more price delivery again, like something which I said in the previous video. When the price takes the high liquidity, then takes the low liquidity, then we're in a sideways delivery. So this essentially is that whole sideways range here, stacking of orders. And obviously we look within there for our POI, which is that FU wick at the bottom. Then price initiates higher prices. We get a breaker structure high showing the direction. And now this is all cause for higher prices being created, obviously cause for lower prices being created to move down to mitigate, and then obviously target that liquidity. And we went over this in our liquidity video, so a lot of you are going to see this already, but just again, just really digging into price delivery. That range is where you want to be looking for that sideways delivery, initiation, mitigation, and continuation. Between this low and this high is where price is going to create cause for higher prices and lower prices to mitigate. And obviously where we're looking for our POI is in that range. So that's why price delivery is so important, because you always want to be looking inside a range, a sideways delivery, an initiation, to then look for your POI within the range to take this higher every single time. And
this is literally the footprint of the BFIs. This is them initiating their intention. So that's, and as you know, SMC traders, you know, I don't even like that term anymore, but you know, we want to follow along with that intention, and you know, that's essentially what all these concepts are alluding to be able to identify. And just another thing to say on this price delivery you went over, Burton, is, you know, this is a 1 minute time frame we're looking at. So let's take this price delivery and think about what this looks like on a higher time frame, right? Price has come down, it's come up, and quite quickly after that pullback has come straight back down again, and then again quite quickly has shot up. What do you think is being left here on a higher time frame? Right? If you don't know, go and look, but essentially it's a wick, right? If we're seeing price delivery print like this, yeah, and this is on a 1 minute, understand that we've had a push down in a minute, we've had a push up in another minute, so now price is going to be up here, right, in terms of where price is currently trading at. And here, what it's going to leave behind is that wick, right? So this is where we talk about being able to read through your time frame. So not just look at the 1 minute, look at the 5 minute, look at the 10 minute, look at the 15. Actually be able to understand what this price delivery will look like on a higher time frame. Because what we're essentially looking at here is that wick, higher time frame wick, so probably an FU wick, and then that mitigation leaving cause for something in the future, obviously and then a move into higher prices. But yeah, just again, think about your time frames when you're observing price, because it will just give you that, you know, refined skill set to use in as your daily one of your daily tools.
I was going to say here as well, if this is a 5 minute OB, I'm pretty sure this is a full bodied OB. I checked this one as well. So you're seeing here again that mitigation of that 5 minute OB, and then again you're seeing range, initiation, mitigation, and continue lower. And obviously this is all liquidity being built underneath here, obviously to take. So this was a potential another entry that you could look to get involved in for either a hedge of this position here to protect that position, or to just get involved if you haven't got involved in that, because you can still take these ones. If BFIs are initiating their positions after mitigating the order block left, then these are the ones that you want to get involved in. These are literally what we get involved in. This is what we look at: momentum shift, BFI, order flow, and we're following their positions. So it
doesn't. That's the great thing. It doesn't matter in which direction. It could be up or down, bullish or bearish. Right? We're happy to follow it in either direction. So we don't hold biases too strong. But of course, when we're thinking about the full picture and higher time frames, then we want to be following that narrative for what the higher time frame is showing us, right? In terms of if we're looking to hold a trade, yeah. But don't come to your charts thinking that you're looking to get a 1 to 100 or 1 to 30 or 1 to. There's no, you can get whatever you need, right? Whatever the market presents to you. That could be a 1 to 7, 1 to 10, 1 to 17. And who knows, next week, Thursday, when you take a trade, it turns out to be a 1 to 60. The idea here is that don't, look at, when you're doing these markups, ask yourselves, where is the best place to get in? Don't worry about the direction. Just understand where's the best place to get in, as Burton's showing you now, and how these mitigations are happening over and over and over. because this is where you want to focus. This is where you want to get your entry. This is where you're going to have the smaller stop loss and the biggest reward. And it doesn't just have to be, you know, at these, you know, higher time frame swing points. We can trade within that too. And yeah, I think for me personally, if I was in this long, I definitely would have took this short. It's pretty simple play.
Definitely. I was going to say one more thing here as well. This OB that you had here was mitigated here. Reaction, no follow through, meaning that the momentum's still bullish. And then this reaction here, which obviously didn't draw on, was, let me just clear this, was this, I mean, what even candle would you call this? Doji?
It's just a doji
candle, which we know to be a lower time frame range. So sideways delivery, initiation, this would have been cause to mitigate here. And then obviously reaction was to create more liquidity to continue higher, because we've got no swing BOS, meaning weak highs were created in order to run price higher there. But that was,
there's this range here that we wanted to mention as well. I'm gonna go through that. Just yeah, so you've marked just delete yours for a minute, so you can zoom into that area as well. Actually, would be much better. Yeah, so you've marked this area here. I'm assuming maybe another time frame, but just looking at this, I wouldn't have done this. My range would have looked something along the lines of this, right? And if you look if you look right, you'll notice that price does come back to 50% of this. So this, when we're looking here, all of this is that buy move, right, to be mitigated, and then that's obviously that buy to sell. But look, before the sell happens, what happens? The range, right? A range is created. So this is the range that I've become interested in, contained price action, right? So I know that this is my point of interest. And if you go right, Burton, just seeing how that how this played out, you can see if I was to just put this on and do about relatively 50%, you notice that it comes straight back into 50, right? And then obviously just again, a reaction point, we know what's above here, cause, we know we have this mitigation of this OB that didn't create any breaker structure, so price is more than likely coming to take this swing high. But yeah, just you know, again, as Burton says, just focus on your ranges, and this, all we're trying to understand here is where is price contained, because that's where orders have been initiated. So just a small refinement there, but yeah, not much else to say from me.
Just trying to think if there's anything else I wanted to mention. I think that was everything, pretty sure. But yeah, again, another great markup. It's good to see that you're putting everything on for us to see and understand exactly what you're seeing from your perspective as well. I mean, here again, even this whole delivery is sideways. Oh, one thing I wanted to say as well, that's what it was. When you're drawing ranges, so like any sort of sideways delivery like this, let's say for example it's come up, it's come down, and this is the range you're looking at. Draw the range from the highest point to the lowest point, because that's the contained price in that whole section there. So give an example of one I was just looking at. Oh yeah, here it is. Zoom in. So like example here, this high was taken, then this low was taken. So now this, from this high to this low, is that whole contained price. And of course, this is our range in here. And this is where we look for our point of interest, which is again within this wick on a lower time frame. But that's your range, initiation, cause being created, and then mitigation and continuation higher, which is literally stacking of orders, initiation, cause created, taken, and continued higher. And if sorry, go on.
It may, like this being a you know, quote unquote BOS, and this being, I mean, it's not a BOS beyond jump. You know what I'm trying to say? It's moving above and below this 1 minute. And you know, you have to understand again, what does this look like on a higher time frame, right? This is a break and it did not close above, and this is a break and did not close below. That basically means the same thing here. Price is contained. Only because we've had a break, right? Price is still contained. There's very little difference in here, and it's subtle, but again, I feel like it's just it's more of an understanding thing. But yeah, obviously we know what happens in the range. That's where they're stacking their orders. Here we have a range, right? You have that mitigation out of that range, and then obviously we see higher prices.
Yeah, so it's literally just focusing your eyes on price delivery. We're going to obviously keep saying this all the time, because this is how we learned and understood and took these concepts and fully understood what price delivery was and how the BFIs initiate their positions. It was from understanding price delivery, from ranges. So we went through a whole understanding of ranges, just weeks and weeks of just understanding ranges, and then initiations. That was the next thing, and then training our eyes to see initiations, and then understanding that initiations can also be this sort of price delivery where it doesn't really look what people would say quote unquote impulsive, but it's still a range, initiation, mitigation, and continuation higher. So the prices, BFIs, this is how they move the price. It's range, initiation, mitigation, continuation. Cause is created and then to obviously target and obviously get people involved in the market so that they can transact their orders. And it's always the same delivery.
And it's the variation of the same idea. It's the same model. It's the same. The time frames are just showing us a variation of what that model looks like. And this is happening within, the lower time frame is happening within the higher time frame, right? So it's consistent. The delivery is very, very consistent, and I'm sure you guys see this already. The next stage, once you become aware of the delivery, is then obviously locating where the best places are to get in, and then building that skill, and obviously developing to, consistently taking positions, and again, just learning. It's like you have to enjoy it. It has to be fun. We sit here for hours, after we've done the videos, after we traded with this, we're chilling with each other, and we're talking charts. We're talking charts. We're talking about ranges or something that happened that day on EU. Even if I'm not talking to Burton, or Burton's not talking to me, Burton's marking up his charts for his, for his personal journal, right? So it's consistent observation, and that's what we're trying to drill in here. This is how you obtain the skill faster. You have the information, you have the understanding, right? You're in the right place. Now it's about just doubling down on gaining that skill and that ability to be able to execute, on a consistent basis. Losses don't matter at this stage. It's all about just gaining the understanding and looking forward to the future, because everyone in here is gonna, fulfill every dream you have through this information. So yeah, it's very, very important.
And this is obviously, just want to show you something as well, real quick. This is just proof that we literally do exactly what we say to do. Like, all of these in here are just all my markups from just weeks, and Chuck's has exactly the same. These are just all the week's markups of just exactly what we say to do. Just mark up the charts, every single move, understand the moves. We do this every single, some days I missed because these are days that I'm not really trading, but every single day that I'm trading or watching the charts, every time I finish, I'm looking at it. And then at the end of the week, I just go over to this. What did I take away from the week? And then in every single one, I just go back and look through all the things that I've taken away from that week. So I can take it into the next week, and then I have next week's focuses. What am I looking at next week? Or, what am I looking at? What am I looking to improve on, essentially? But we're only going to tell you exactly what we're doing. We're not going to tell you to do something that we're not doing. That would be pointless. So
I think another good thing to mention is back testing. Right? We're not against back testing. There's just we just don't feel there's much need for it, because in 1 week there's so much, price delivery on 1 minute, and at the end of every day, where you don't need to go back. It's, whether you're going back to last week, I can understand if you're going back to last week, if you just want to refresh your mind maybe on what happened. But if you're literally going back and using the bar replay tool, to the beginning of the year or last month, ask yourself, what are you learning? Are you learning in the moment? Are you learning real live price delivery? Right? Are you learning to observe real? And my answer for me, or both for me and Burton, is no. We're not doing that when you're backtesting. It's not live, so I don't want nothing to do with anything that's not live. I just want to focus on live price delivery. Even if I don't know what's happening in this moment, I will wait and then look in hindsight. And that method of learning for us is literally what excelled, you know, our learning in this field. So, you know, we're not against backtesting, but just ask yourself, you know, what is this process really doing for you? Are you trying to build confidence? Do you trust the narratives and the concepts? Are you trying to see if they, like, just ask yourself the question? And you know, we did, and for us, we, as I said, we don't backtest. We only watch the market live and then mark up in hindsight if that, you know, if we're trying to get some sort of, you know, backtesting, we're trying to fit some sort of backtesting process into our habits. But yeah, hope that was, hope you all got the point. But again, we're not against backtesting. I'm sure some of you do it, but for us, we do not backtest.
Cool. So unless there's anything else to add,
it's all good.
Thank you all again for sending your markups. We literally looked at everyone's markups. We just chose these 3 to go through. But again, everyone's making just incredible progress. It's literally amazing for us to see. This is our 2nd month of NJAT, and to see you all marking up charts in a very similar way to us and understanding the concepts. And what we plan to do next is we was going to do PDFs of the concepts, but we've decided to make videos. I think being able to see that visually at the same time is going to be a lot more beneficial for you guys. So the PDFs that we were going to do, like OBs, for example, entries, we're going to go through all that, cores, we're going to go through price delivery. This is what we got planned for every single weekend to make these videos. And obviously let us know your feedback on the cores video that was in there, and obviously Hem's video as well. Make sure you comment on that, what you've taken away from that as well. And obviously next week is Christmas week, so volume might be a bit lower than usual, but again, BFIs are still transaction in orders, which means we're still going to have tons of opportunities to get involved in. So obviously make sure you're focused for the week and you're carrying through that momentum. And yeah, so thank you for watching, guys, and let's have a good week.
Catch you all soon.